Breaking news today, China has banned and declared illegal all cryptocurrency transactions. This follows an earlier couple of years ago where they banned digital currencies from the country, but now they're banning any trading as illegal. This is the Central Bank of China, effectively the government, declaring that all transactions on cryptocurrencies will be illegal, effectively banning digital tokens such as bitcoins. Now, virtual currency related activities are illegal financial activities, the People's Bank of China said, warning it seriously endangers the safety of people's assets. Well, I think in a way they've got that right. I mean, if you're piling all your money into these digital currencies, then it is, you are endangering the safety of your assets. And this is obviously a blow to digital currencies and independent, currencies, if you can call them that, as China was one of the world's largest cryptocurrency markets and one of the largest places for digital mining. So is it a real currency? Well, is it? I mean, let's face it, it's certainly not a reliable and safe way of trading and doing things. Like, for instance, if you had digital currency, you were buying something this morning, well, you'd have found that the price of your currency had fell by $2,000 just following that announcement. So when I looked at earlier at the price of Bitcoin in the morning, I think it was something like $44,000 per coin. And, this is at 10 p.m. last night. Then by today, it'd fallen to something like 41,000. It's slightly recovered now. So how could you pay for something when the price is up and down like a yo-yo, and it only takes one announcement by China or by some other central bank warning that they don't like independent currency, they don't like people putting their money into these ways of paying for things and the ways of holding money. Obviously, the central banks want to control the money and the money supply of that country. So, I mean, I don't think it's a currency. People ask me, should I put money into cryptocurrencies? Well, yeah, if you want to speculate, if you've got money that you can afford to lose, then why not? But it's not a currency. I can't go down to my shop and buy, a coffee with digital currency. Maybe you can in, was it Venezuela, El Salvador? Yeah, but people are revolting against it. They're saying, what is this all about? Why would you want to pay for a pizza with digital currency? Well, it just doesn't make sense to me. It's just something that is money out of thin air, really. So this is the latest Chinese crackdown on what it sees as a volatile, speculative investment. As I've said, they agree with me, the Chinese central bank. And at best, it's a way to launder money, they say at worst. So, there you go. It's a way that money can move around without their control. And I think that's the key behind this. And this follows a ban on trading cryptocurrency, but that is continued online through foreign exchanges. So China has already made earlier warnings this year of crackdowns. In May, Chinese state institutions warned that buyers have no protection for continuing to trade in Bitcoin and other currencies online. In June, it told banks then and payment platforms to stop facilitating transactions and issued bans on mining the currency. I'll come on to mining in a little while. And the trade of using, this is mining, which means you're using powerful computers, but power-hungry computers to create digital coins. And Friday's announcement is a stark warning that China wants to really shut down all cryptocurrency trading and activities in any form. And, the statement clearly states that anyone involved in these illegal financial activities are committing a criminal offence and will be prosecuted. They don't mess around in China when they prosecute people. So even foreign websites that offering services to Chinese citizens have been declared as illegal activity. Well, I don't know how they can declare something overseas as illegal. And in any case, I thought China pretty much controls what comes in and out of their country over the web. But China already, as we know, has its own digital version of the yuan currency, yuan, and I think other central banks are set to follow. I think in Scandinavia, they're certainly moving towards that. In Sweden, all the central banks really want to phase out cash because cash is expensive to move around. You can't control cash. You don't know how much people are holding in cash under their mattresses or whatever. So you can't control that. So all the governments want to control us, its citizens, control our money, control where we spend our money, everything really. So this is what it's all about. So Bitcoin might be fine for the moment, but what happens when all the governments get together and clamp down on it? Just like they can bring in a lockdown altogether, they can do everything all in synchronicity. So maybe they will do this with these digital currencies, because clearly they don't like people moving their money around without their knowledge or control. So new coins, this is what will happen. So let me talk about how they're mined. Mining is really a technology behind cryptocurrencies, and it includes currencies like Bitcoin, and is linked to many of these powerful distributed computers around the world, verifying and checking transaction on a giant shared ledger known as the blockchain. The blockchain is the technology behind this, and blockchain could emerge is emerging as a new technology that could change many of our financial and legal transactions in the future. So these new coins are randomly awarded to those who take part in this work known as crypto mining. So if you're looking for a new job, maybe you can become a miner, a crypto miner, who knows. So China, with its relatively low electricity costs and cheaper computer hardware, has previously become the world's main center for mining activity. And even online gamers have blamed the mining industry for a global shortage in these powerful graphics cards which miners use to process digital currencies. I don't think it would work on my laptop because it's always running slow. I don't think I'd be able to become a miner with my laptop. So anyway, 2 years ago in 2019, China accounted for 75% of the world's Bitcoin energy use, and now it's dropped to 46%. So it's not very environmentally friendly, this, is it? So let's see what happens with Bitcoin. I said the price dropped today, but it hasn't collapsed. It's just dropped slightly, but it hasn't really fallen out of bed. But we know that a couple of years ago, the Bitcoin price was something like $10,000. And if I go back, say, over a 5-year period, it's gone from $6,000, 2016. It reached a peak of $62,000 last April, and then dropped to 33,000. It's gone up to 50,000 again. Now, as of today, it seems to have recovered now to $44,000. So it's kind of recovered a little bit from this morning's drop. So, I mean, I don't call that a currency. How could you hold your money in that kind of currency, which could drop by 10% in an hour? How could you pay for stuff? How could you, if your savings was in this digital currency, you'd be looking at it every night. Oh, where's my savings today? I don't see that as a proper currency, and many central banks don't agree with me. And although on the other hand, if you disagree with me, say so in the comments, because many people think of Bitcoin and digital currencies as the future of money. I personally don't. Other news, and this is trending things. I like to give people not just what's going on now, but a look to the future and see what is trending. Now, for many years now, I've been talking about the move to AI technology, which will replace millions and millions of jobs. And I talked about 5 years ago that driverless trucks would probably get rid of 3 million jobs in the US alone. Now, this has been around for a while, driverless vehicles. They've tried them on the roads. We see these funny stories of things going wrong. They hit the back of the test car and that sort of thing. But this is not going to go away. Many companies, including Tesla, one of the reasons for the high price of Tesla shares is because they have this driverless technology in the background. Uber are experimenting with things. Volvo cars have got driverless technology. And now we see that FedEx are testing their first driverless truck, these huge American trucks that will be driven from Dallas to Houston, hundreds of miles, without a driver. Now, in this test, they're going to have somebody on board in case it all goes wrong. But, just in time, when they said, oh, there's a shortage of drivers. Where are we going to find the drivers to drive these? All the drivers are retiring. This is crap. Drivers can't even get licenses because of the problem with the licensing authority. They can't get their provisional licenses and their other licenses processed in time. And then insurers won't insure them. So something is blocking this. And then at the same time, just in time to save us from this shortage, driverless trucks. Now we can all get our food. Now we can all get our fuel because we're running out of petrol, aren't we? Because of the driver shortage. Where did this come from? Where did we suddenly... I can see trucks thundering around our roads every minute and suddenly there's a shortage. Where did this come from? Where did all these drivers disappear to? They're even saying it in Germany and America. Now, America's not affected by Brexit, is it? And yet there's all these people unemployed, and yet there's a driver shortage. Now, the UK government are even considering temporary visas to solve the driver shortage. Suddenly they're going to come from Europe again, are they? Well, people here have been phoning into radio shows saying, I've got my HGV licence after 6 months and £5,000, and I can't get insured, I can't get a job. All the companies want experience. This sounds like, I know I sound like a conspiracy theorist, but this sounds like nonsense to me. And then there's a fuel shortage, also blamed by BP on a shortage of tanker drivers. BP, one of the biggest oil companies in the world, one of the biggest companies in the UK, suddenly, where have all the tanker drivers gone? This company's not a newfangled company. They've been around for years. So now there's a shortage. Well, they've talked about a shortage. There might be a shortage, and the government said, "Don't panic. There won't be any shortage. We'll keep the supplies coming through." But of course, now it's become a self-fulfilling prophecy because now everybody's gone out and filled up their tanks and a few cans of petrol on the side, and of course this is creating panic. And now there will be a shortage of fuel in the UK. I have no doubt about that, unless they bring in some form of rationing. And now, just to make it all worse, the climate change protesters have blocked the port of Dover, just to make things worse for fuel shortage, food shortage, this shortage, that shortage, gas prices going up. What's all happening? Are we heading for a winter of discontent? The government are even planning to change the SAWS scheme, which is the Seasonal Agricultural Scheme for temporary visas. These have been around for years, which actually brings in workers mainly from non-EU countries to come in on a 6-month visa to pick the crops, because apparently nobody in Britain wants to do that. All these millions of unemployed people and people on the so-called sick can't do that kind of work, so they have to bring in workers. This is not new. This has been going on for years. So that's another trend coming up. A stock market crash for the time being has been avoided as Evergrande comes to an arrangement with creditors and bondholders, but I don't think we're out of the water with that yet, because I think there is a lot more to follow in this property boom, and in China, where millions of properties have been built. Some are empty. There's ghost cities apparently where they're actually demolishing some buildings. I just think there's a speculative fueling going on here, and over the last few years, that much of its economic growth has been based on this property boom and ease of lending to build all these properties. And I think there's something, there's more to this than meets the eye, and something's going to go wrong. And the Chinese government are trying to paper over the cracks to keep their economy booming, but something's not right there. Evergrande is just the tip of the iceberg, I feel. I said yesterday that half mortgage borrowers remain in debt after retirement, as this, I think this is part of a growing trend of living standards falling. In the past, I'm sure your parents, grandparents had, if they bought their own property, took pride in paying off that mortgage after 15, 20, 25 years. They took pride in that. Now people can't even pay their mortgage off by the time they've retired. Or if they do pay their mortgage off, they have to get another mortgage called an equity release or a lifetime mortgage to give money to their children and grandchildren so that they can afford to buy their property. In other words, what you can see here is living standards falling, but prices of assets like property going up through the roof and getting beyond the reach of people, ordinary people who are unable to buy properties. And meanwhile, foreign investors from China, where they can get easy money, and Russia, where they just, I don't know where they get their money from, they can come in and buy up properties left, right and centre, putting them out of the reach of ordinary people who just want to buy a home. They don't want to speculate in property. They just want to buy a home. In fact, the Labour Party in their conference this year want to ban foreign investors from buying new build homes for at least 6 months until local people can buy them. But in reality, a lot of local people can't afford these new build properties. And even when the government they force developers to give away 20-30% of them to affordable homes, they can't afford those affordable homes either, because they're giving them away on shared ownership schemes, which are, again, very expensive. A shared ownership means you buy, I see them advertised, buy a shared ownership property in Hackney, £150,000. Oh, that looks cheap. No, it's just for a quarter. It's for 25% of the property. All you're buying is a bit of the property. You're buying, so if you've got a 4-bed property, you're buying 1 bedroom of it, effectively. But they're selling off these high-rise flats as shared ownership schemes. Then you buy a quarter of it and you have to borrow to buy that. Then you're paying rent for the rest of it. Then you're paying exorbitant service charges to run these shiny new buildings with a concierge and maybe a gym and a swimming pool and all the rest of it. So the cost of buying these homes is enormously expensive, and no wonder people can't afford it, because they obviously look at your income. They say, well, okay, you can get a mortgage for a quarter, but how can you afford the rent? And then we're going to have to means test this. No wonder people can't afford to buy these homes. What the government needs to do is build more council properties or local authority properties to give real options to low-paid workers. Otherwise, low-paid workers will not be able to afford to live in the cities. They're going to have to move miles out in the sticks, and then they can't afford to travel in to do a minimum wage job. So the government needs to look at this. I've been saying this for years. When I was a councillor, we need to build more council properties. I was in Camden the other day, and Camden Council are building more council houses, but not on the scale that they used to. When I lived in Camden as a child, they were building huge estates of council properties. There was huge choice in council properties. People could pick and choose what they wanted. Oh, I don't like this place. I'd rather a place here or there. I don't want a flat. I want a house. Believe it or not, there was choices in that period, in the 60s and 70s. Now there's no choice, and people who are on the housing list are living in slum hotels really until they can find a house for them. So that's what we need to do to solve the big problem of housing and the cost of housing. We noticed that in the 60s and 70s, when they mass built council houses, the price of properties came down. They stagnated for many years, and then they went up again in the 70s, which coincided with them more or less with the council stopped building council houses and stopped building major cities like Milton Keynes, and big developments like Basildon and what's the other one, Harlow in Essex, and the place just outside Gatwick. They built major cities in those days. Well, not always cities, but big towns. Built them on existing road networks like the M1 or like the M11, and they planned ahead many years and built them on rail networks. Like Harlow was built on a rail network going into Liverpool Street in London. It's built near a planned expansion of an airport, Stansted. The city just outside Gatwick, Crawley, I think it is, was built near Gatwick Airport, again on a main road, on a road network, which was the M23 or the A23, whatever it was in those days. And they planned ahead. It's on a rail network going into London. It's near an airport. It has jobs in that area. Similarly with Milton Keynes, built on the M1 with a fast train line going up north and down south into Euston, and they built industrial estates on the side, so there was jobs there. And Milton Keynes has been a success. We need more places like that. We can't just keep chipping away at the existing areas and cramming more properties into the city and then let's build on the green belt and upset everybody, or build a new garden village rather than a proper town or a city in a place where there is space for these things. So that's what the government needs to do. That's my rant of the day on property. Again, UK base rates were held yesterday by the Monetary Policy Committee, but the Bank of England is moving close, according to the Times, is moving close. You might not be able to see this, it might be back to front, but Bank of England moving closer to interest rate rise because two of the people on the policy committee voted for a rate rise. So they expect that in 2022 rates could rise because they're predicting over 4% inflation by the end of the year. This is contrary to their previous prediction that there will be a slight rise in inflation in the autumn, but it will be temporary. And in America, they're saying the same thing, where inflation, I think, has already exceeded 5%. In fact, they're fiddling with the inflation figures there and taking stuff out like rentals, to cushion the blow and make inflation really look lower. So it's all been manipulated here. And so I think inflation is going to go higher and they will have to increase interest rates earlier than predicted, because in America they're predicting in 2023. Of course, if they raise interest rates, they themselves will have to pay higher interest rates on the trillions of dollars that they've created in the bond market and all this money printing nonsense that is causing this inflation, as it caused it in the German Weimar Republic, as it caused it in Argentina many times, and Venezuela, the oil-rich country that is a disaster place. That's caused it. And of course in Zimbabwe, where they eventually had to ditch the local currency and move on to the dollar. And other countries have done the same thing. I think El Salvador, which is, funny enough, adopted Bitcoin as a currency, they had to ditch their own currency because of hyperinflation. Now, inflation, that brings me on to another subject. You probably can't read this. Fears grow over threats of stagflation. This is where you have a combination of low growth with high inflation. And that's bad news for any economy, and it's certainly bad news for Britain. Don't forget, when things went wrong in Japan in the 80s, remember in the 80s, Japan were going to take over the world, weren't they? Everything was Japanese, this, Japanese, that. Japan are buying all the properties in Manhattan. Japanese are buying up London, buying up British companies. And then things went wrong for them. And they had a period of stagflation. They had a period of no growth for 30 years, until now, in fact. In fact, their stock market, I believe I heard a statistic that their stock market is half the price it was in the 80s now. So things have been bad in Japan. And despite the fact they had low interest rates, they had negative interest rates almost, and yet their economy is still a basket case. So I'm not saying everything is disaster in Japan, but they've had serious problems and it takes a long time to get out of this. So to just watch that, that's a future trend. Listen to that word and learn that word, stagflation. Look it up if you don't know what it means, because that is a serious problem. Now, look, this is all leading to something which is what I call the New World Order. And people need to wake up about this because, the world of business is changing, the world of jobs are changing. Unless you adapt, your business and or your job prospect will go into decline and could disappear. I've already talked about these driverless vehicles, but AI is affecting many other jobs, including the legal world, the legal profession. They call themselves a profession, not an industry, by the way. It's affecting accountancy. It's affecting white-collar jobs, not just blue-collar jobs like my blue here, meaning that it's affecting the office-type jobs, the higher-paid jobs, not just the low-paid work. It's affecting everything. So you need to wake up. And I think what you need to do is think about how you can retrain yourself, how you can learn new skills, and what can you do to take advantage of these changes. The biggest revolution, one of the biggest revolutions, is online trading and social media marketing, of course. Businesses which have adapted to this boom have themselves boomed, while others are out of business. We think of the many stores we've seen disappear. I think the last store in America, Sears, closed down recently. That's a company that's been around over 100 years. Similarly, in the UK, Debenhams out of business. Gap are going out of business in the UK. Their shops have been rescued by a deal with Next to keep the brand alive. But many other shops, Woolworths are gone, right? Woolworths, Sears, gone. Tower Records, well, I'm going back a while, Blockbusters. Things, if you don't adapt, then you will die. Blockbusters was the dominant video market producer when Netflix was just a a mail order video firm. And look what's happening today. Netflix now one of the biggest players in the world. One of those FANG shares that is dominating the share market, is distorting the value of the stock markets. Look what's happened there. So if you don't adapt, then your company will go down. And if you don't adapt as a person, you will go down with it. And you will end up on the scrap heap on some universal credit or some universal payment. So what can you do? Look, you can all learn how to adapt to social media. It's not just kids on this, adults can learn this as well. We can all learn how to, not only how to use social media, but how to make money on social media. What I'm saying to you is to stop wasting time on social media just looking at other people making money, start making money yourself. And that brings me on to someone called a mentor of mine, Paul O'Mahony, who's written a book called Rethink Social Media. And this should be really titled Rethink Social Media and the Whole of the World and the whole of business, because this is big. Social media is changing, the world of money is changing, the world of jobs and business is changing, and you need to rethink this. Now, instead of going out and reading the whole of this book and spending money on the book, it's 300 odd pages. Why not look at a free web class that Paul is running right now? You can click on my link below and go onto his web class and learn how to use this time you're already spending on social media and turn this into a business and a digital business to make money for yourself rather than just making money from someone else. Because the reality is you're probably already making money on social media, but not for you, but for somebody else. And that's not just a glib line. It's true. You're making, when you go on social media and click on things, you're probably making money for somebody else rather than yourself. So you can learn, how to use the time you're spending on social media. And let's face it, most people are on social media as soon as they wake up. They're taking their phones into the toilet to look at their social media. They're taking it on dates. People are sitting opposite each other on dates, looking at their phone. They're going, yeah, okay, right. Have you noticed that when the girls, you're talking to a girl and she's going like this, yeah, okay, what was that you said? What's that you said? Listen, I've got my social media here to look at. I can't afford to listen to you talking. Just pay for this meal and let's go. Sorry, that's a joke, girls, but I'm sure guys do this as well. But you know what I mean, right? People are going on dates and spending more time on social media than talking to their partners, right? We know that people are sitting around dinner tables on their phones. In fact, families have said, look, we've got to ban this, kids. Like, leave your phone outside the dining room, because kids are sitting there and you can see it on trains and buses and planes, right? People are on social media all the time. So why not use that time to make money on social media rather than just wasting your time on social media? Now, in this web class, you can learn how to get a product to sell even if you don't have one already, how to get it for nothing, how to use this strategy that Paul has used to make millions for himself over the last few years. He started with nothing. He started with no knowledge and a wide skepticism of social media. So look, go to this web class, click on the link below. If you own a business, if you want to start a business, but without quitting your job, without wasting a lot of money starting a business, here you can start a business for virtually nothing. You can start a business for free, without any capital, without having to quit your job. So if you're serious about this and you want to start making money online, you're tired of wasting time on social media, go to this free web class right now, register for it right now. What have you got to lose? Stop wasting time on social media and start making money instead, even if you lack the time, resources and experience or expertise. Click on the link below and Paul will teach you something new today, because if you don't learn, you're going to go down with the likes of Debenhams, Sears, Blockbusters and Woolworths. You've got to change, you've got to adapt to this world, because it's not just the strongest and the fittest that survive, but the most adaptable. Click on the link below and go to this free web class right now.